Can you see my screen? Yes. You can unmute yourself, dear students. If any queries you have, you can stop me then and there, and you can put a chat message. I hope that you're clear. Okay. Ma'am, Madhu ma'am?
Yes, sir.
My screen is visible, ma'am?
Yes, sir.
Yeah. Okay. Thank you. Okay. So today what we are going to see is, today we are going to discuss on the specimen. We have last class we have gone through on the specimen for computation of taxable income. Correct. So how we can compute that is, you will be given a profit and loss account of a company. Using that, you have to find out what is the total taxable income of a companies with the various source of income. So for a company, what are the source of income they'll be having? They'll be having only 4 heads of income. When it comes to companies, they'll be having only 4 heads of income. What are the 4 heads of income? That is income from house property, income from business, and income from capital gain, and income from other sources. Only 4 heads of income. So this heads of income will be considered, and which will be liable to pay the tax. So for main here, when it comes to companies calculation, their main head of income is income from business. That is what we have to see. Okay. So here we have to compute a net profit as per the computed net profit as per profit and loss account, whatever it is given in the question. We have to consider that. And next is inadmissible expenses. What do you mean by inadmissible expenses? Inadmissible expenses is a expenses which is not related to business, but they have debited. So such kind of expenses we have to add it back. Why we are adding this? Because of this, my profit has shown at less. To rectify that only I am adding this. Am I clear? Okay. And next is business income not credited to profit and loss account. Okay. Any business income not credited. Because of this treatment, my profit and loss account profits are shown at a lesser cost. So for an example, here in this is our this is your profit and loss account. Okay, for an example. Okay, so in this you will be getting a net profit of rupees 50,000. Okay, but you have a income from business which they have not credit of rupees 20,000. Okay, in the P&L account they didn't credit it. Now what you have to do is, since it is an income from business, you have to add it back. Why we are adding? Because if they have added here in the profit and loss account, that is income from business 20,000, then my profit would be shown at 70,000. Correct? Because of they have not added here, now we are adding in the calculation. Am I clear? Now we are adding in the calculation. I hope you are clear in this. Next is overvaluation of opening stock and undervaluation of closing stock. Okay, we have to see what it is, how much is the overvaluation of opening stock and undervaluation. Why we are adding this overvaluation? Because of this overvaluation of opening stock, my profits are shown at less. So to rectify that only I am adding. And the next is undervaluation of closing stock. Because of undervaluation, the valuing the lesser cost, because we are valuing the assets at the lesser stock at a lesser cost. Because of that, my profit is reduced. To rectify that, to correct it, that's the reason we are adding back. So these are the 3 treatments what we are going to do. And the next is less allowed admissible expenses not debited to profit and loss account. As per income tax, they are saying only one thing, that is, we don't want your money, and the same way you pay the exact money whatever you earn. That's all. So that is the reason when you are considering that inadmissible which is now added, that you are which is minus D in the profit and loss account, that you are adding here. Same way, expenses which is related to business but which is not debited, such kind of expenses you can add it deduct here. Okay, same way, next is non-business income credited. Because of this non-business income, my profit is shown at higher cost. So to rectify only I am reducing. The same way when it comes to undervaluation of opening stock and overvaluation of closing stock. So this treatment also similar. Because of undervaluation, my stock has valued less. Because of that, my profit has shown at higher. To rectify that, I am reducing now. I am minusing here. Same way, overvaluation of opening stock. Because of overvaluing, my profit has shown at less. So to rectify that, I am doing this. Okay. Am I clear? Any doubt in this? I hope you're clear in this. So this is specimen for computation of taxable income from business. Okay, and the next is, once after computing the taxable income from business, next step is we have to calculate what are the other heads of income. Other heads of income, most probably you will be getting a computed value. The computed value you will be getting. Okay, and the next is, in this, income from house property. First head of income for companies is income from house property. For an example, in this case, suppose the company has an income from house property of 50,000. Okay, the computed income from business 20,000, for an example I'm telling. And the next is income from capital gain. It is short term capital gain, for an example 10,000. And the next is income from other source 5,000. So what you have to do is, when you are computing, you have to consider here only the computed value. You have to consider only the computed value. Okay, so total of this, what is the total of this? Put me in the chat box. What is the total? What is the total? I just want a response from your end. I hope you people are there in the class. Yes. 1 lakh 30,000. Okay. So this will be my gross total income, which is called as GTI. Okay. And the next is less deduction under section 80G to 80LA, if any kind of deduction. So what do you mean by deduction? A deduction is nothing but it's a benefit. It comes under tax evasion concept, using the loopholes of the using the loopholes, using the provisions of tax, we are reducing my burden. So for an example, the company has given a donation. Given a donation, so that donation you can claim it under 80G. That is, so for an example 20,000. Okay, for an example 20,000. So you will be minusing this deductions if you have invested, or if a business is started in some rural area. So the taxes, that income tax, they give some benefits also for the new business people. So such kind of benefits you can claim under the deductions. Okay, so that deductions, after claiming this, you'll be getting one total, that is 1,10,000. So this will be the total taxable income. Okay, this will be the total taxable income. Once after this computation, what we have to do is, we have to see that whether my company is a domestic or a foreign company. And next, we have to see whether my company is, what is a income earned, whether I'm liable to pay tax of 25% or 30% or 25 or 22, 15 or 40. So 40 is eligible for which company? It is for the foreign company. The foreign company, no matter what you are, whether you are utilizing the section 115 BA, or utilizing the section under 115 BAA, or you are utilizing the section 115 BAB, no matter what it is, but you have to pay a tax at flat rate. You have to pay a tax at flat rate of 40%. But when it comes to domestic company, there is some provisions they have given. What is that? If a turnover or a gross profit of the company does not exceed rupees 400 crores in the year, in the previous year 2018-19, in the previous year 2019 18-19, if your gross turnover does not exceed 400 crores, that time you can claim this option. Suppose in my question they didn't give information about the gross turnover in the previous year. So what you have to do is, you have to consider 25% for whom? For the domestic company. Okay, for the domestic company. Okay, so this is, once after finding out whether your company is a domestic company and you are eligible for 25%, next what you have to do is, you have to compute. So in this case, what is my total taxable income? What is my total taxable income? My total taxable income will be 1,10,000. 10,000 with that example, whatever we have calculated earlier, right? With that only I am proceeding. So my total taxable income is 1,20,000. I came to know my company is a domestic company. I identified and I am eligible for 25%. So what I have to do is I have to calculate. Tax liability, ultimate normal tax liability. Okay, calculation of normal NTL, which is called NTL, normal tax liability. So it is a flat rate. So I came to know my company is a domestic rate. So straight away 25%. So how much in this? On 1,10,000, 25% is how much? Yes, 27,500. Oh, very good, very good. Okay, so you got it this correct. Now so we found that this is what 25,000. Next 27,500, the flat rate of tax what I'm supposed to pay. To this I need to add surcharges. Okay, surcharges when I supposed to pay when my total income, that is the total income, if it exceed 100 crore, that is my total taxable income. If it exceeds 1 crore, then I supposed to pay 7%. But in this case, what is my total income? It is 1,10,000 only, right? So I'm not supposed to pay any surcharges. Am I clear? I'm not supposed to pay any surcharges. To this, we need to add one more thing. That is health and education cess of 4%. So for this 4%, on what value we have to calculate? On the tax value. What is the tax value? That is flat rate, whatever amount you found out, right? That is only known as tax value. That is 27,500 into 4%. So how much it is? 1,100. Very good. Very good. So this will be my total normal tax liability. So what is it is? How much it is total? 27,500 plus 1,100. So if I'm not wrong, it is 28,600. Correct. Very good. So this is called normal tax liability. This is called normal tax liability. For companies, what you have to do is you have to do one more thing. What it is? You have to calculate MAT, which is called minimum alternative tax, under section 150 JB. So under this section you have to calculate MAT, and what you have to do, and you have to compare it. You have to compare between normal tax liability. For an example, we got a normal tax liability of 28,600, right? Correct. So we have to calculate MAT, that is tax at 18.5% on book profit. That whatever, for an example, if my MAT comes around 30,000. Why I'm not explaining MAT here is we'll be going through, there is a separate procedure. First we'll proceed with this normal tax liability, then we'll go with the MAT calculation in the coming classes. That's the reason I'm just giving the example here. I'm not going in depth in the MAT calculation. Okay, so for an example I got here. So what I have to do is, as a company, I have to compare in this which is highest. So whichever higher will be called as a tax liability. So in this case, which is the highest? 28,600 or 30,000, which is the highest? So that only we have to consider. So which is highest? So 30,000. So ultimate tax liability of a company will be 30,000. Am I clear in this? Concept? Any doubts here till here? If you have any doubts, you can unmute yourself. Any doubts? Can I proceed? Only Sanjay has responded to me. Anything? I think Sanjay or few only are awake in this class. Kindly respond. Any doubts? If you have any doubts, you can tell me here only. The last part. So can you explain the deductions once again? Okay. So you want me to explain about deductions once again? In the last part, one person is asking. Okay, very good. Let me do it. No problem. Okay, see here, deduction. First, I'll explain about the deduction. So deduction is nothing but uh, it is we can claim it on our any kind of investment or saving based on the condition. So here, when it comes to ATG to ATL, there are certain conditions and certain investments you can claim it as a deduction. That you will be learning in the coming class. These deductions also, this ATG to ATL with the problem, we can solve it and you can identify that. Okay, so you'll be discussing here, no worries here, but I'm telling that. So for an example, donation, any donation you give, that you can claim in the deduction under section 80G. That is what here, that it's kind of a, you are serving to the society, so that you can claim it as a deduction. You can reduce your tax burden. If I calculate tax on 1,30,000, my tax payable amount will be more, right? My normal tax liability will be more. Since I have calculated on 1,10,000, my normal tax liability is coming around 28,600, correct? If I'm calculating on 1,30,000, it will be more, right? So you have served some, you served in the form of donation to the society, right? So you can reduce that burden, so your amount will be reduced. Okay, so that is what deduction. And next is, someone asked about the last part. Last part is nothing but in the calculation for the when it comes to calculating the tax liability for companies, what you have to do is, first you have to compute the step one you have to compute the tax income from business, taxable income from business. And the next is any other heads of income we have to see that, that is income from house property or income from capital gain or income from other source, that we have to see. And next is any carry forward loss or any kind of unabsorbed depreciation, that we have to see. Am I clear? Next, once after this, next is we have to proceed with the calculation. Next is we have to proceed with the calculation of the total taxable income. So once after computing the gross total income minus deduction, you will be getting total taxable income. On that, next is you have to find out whether the company is eligible for 25% or 30% or 25 or 22, 15 or 40, based on the nature of the company and what they have utilized. If it is a foreign company, no matter, it is 40% is fixed. If it is a domestic company, these conditions are there. Okay, so when it comes to 50 BA, 1515 BA, certain it is related to some rural scientific, and it is related to special economic zone. If a business is situated in special economic zone and if you have utilized, then you can claim 22%. Sorry, if you have not claimed, then only you can claim this percentage. Okay, suppose if you are claiming, you can't, you are supposed to go with this or this. Okay, so now and last we have to see the preceding previous year, that is 2018-19. We have to see my gross turnover, what it is. If in the question if it is not mentioned, you straight away proceed with 25%. Okay, once after finalizing, next is you have to compute what is a normal tax liability. For the computation of normal tax liability, what we have to see, what is my total taxable income and whether I am a domestic or foreign company. So in this case, for an example, we consider my company is a domestic company where the information is not given. So what I'm doing is I'm calculating going with a 25%. So my total taxable income is 1,10,000 into 25% divided by 100, you will be getting 27,500. Next is, to this we need to add surcharges. Surcharges will be paid on the total income. If my total income exceeds 1 crore, then my surcharges will be 7%. If my total income exceeds 10 crore, then my surcharges will be 12%. On what value? On the tax value, whatever tax we flat rate we consider, right? On the tax value, this 12% and 7% we have to calculate. Next is health and education cess, that is 4% of my income tax plus surcharges. Income tax plus surcharges. Suppose my yes, sorry, it's not suppose. Here health and education cess is compulsory, that is 4% on my tax value. So in this case, the tax value is 27,500. So on this 4%, so that I am getting 1,100. So we have to total this, and then we'll be getting normal tax liability. So next step is, for companies we have to compare normal tax liability and MAT. So we have to compare this both, and whichever is higher, that will be paid as a tax to the government. Am I clear? I hope you are clear now. Any doubts? Without wasting, can we proceed to a problem? Thank you. Okay. Okay. So you can copy down this problem. I think it is in the LMS. I think you have accessed. Yes, Matt. No, no. Matt will be doing in the later portion. That's the reason I'm not explaining here, Jivita. So once after when we start, that time we'll consider how we'll see how to calculate Matt calculations. Okay. I just gave the example. If I discuss about Matt, it will take another 1 or 2 hours. That's the reason. Okay. So we'll discuss when we are discussing during the problems. We'll discuss how to compute the Matt calculation. Okay. So I hope that have you gone through the LMS content, everyone? I need some response. Yes, sir. So I think you have downloaded the question. This question, is it with you? I need one person to read out this question. Volunteer. You can unmute yourself and kindly read this question. Anyone? Any Arshita or Navya? Anyone who is interested can help me in solving this. Yes. You can unmute yourself. No problem. Madhu ma'am. Madhu ma'am.
Yes, sir.
Ma'am, Arshita, can you unmute, ma'am?
Yes, sir. 2 minutes. Arshita. KC or Arshita, yes. Which Arshita you want me to unmute?
Arshita, yes, ma'am.
Yes, okay. I'm unmuted, Sashi, sir.
Okay, okay, ma'am. Thank you, ma'am.
Good afternoon, sir.
Good afternoon, Arshita. Yeah, proceed now.
XYZ Limited has the following income. Profits and gains of business, rupees 72 lakhs. Income from house property, 7 lakhs. One of its business is eligible for deduction of at 100% of profits under section 80, 1AB, so that is
80 IAB.
IAB. Okay. For the assessment year 2020 and 2021, the profits from such business included in the business income of 58 lakhs. Compute the total taxable income, assuming that it has no other income during the previous year, 2019 and 20.
Okay, okay, thank you. So Arshita here, so listen here. Now they have given the question. So now we have to compute. So for I hope that I have explained the concept of assessment year and previous year. Can you tell what is that assessment and what is the previous year, Arshita? Hello. Okay, fine, no problem. See here.
You're audible. Continue.
Arshita. Okay, fine, you are muted. Okay, fine, no problem. See here, the assessment year is nothing but the year in which we pay the tax, whatever we earned in the previous year. So we earned in the whatever we earned in the previous year, for that we'll be paying a tax in the assessment year. Correct. So now XY Limited. So for XY Limited, we have to find out what is a total taxable income. So to find out the total taxable income, what we have to see? We have to calculate gross total income. How you can calculate the gross total income? There are 4 heads of income, right? Yes or no? So we have to see what are the incomes the company earned, and that income goes under which category we have to see. That is income from house property. First head of income for companies is income from house property. So do we have any income here? Yes, we have an income of 7 lakhs. We have an income of 7 lakhs. So this comes under income from house property. Sorry. Income from house property. And the next is profits and gain of business, rupees 72 lakhs. That is, this comes under which head of income? Can anyone tell me profits and gain of business? Which does it comes under which head of income? In the chat, you can put it in the chat. Income from business. Vignesh, it is not capital gain, it is business. It is a business. You have to say the term. It is a income from business. Here it is really clearly given, right? It's a profits and gain of business. So that is called income from business. It comes under income from business. So in this case, they have given straightly the computed value they have given. So we have to proceed. Next is one of its business is eligible for deduction. So what is this? This will apply. This is applicable only after the gross total income computation. Okay, what they are saying, that is at 100% of profit under section 80 IAB for the assessment year 2021. The profit of such business includes in the business income of rupees 58 lakhs. So what it means, it is nothing but out of this 72 lakhs, this 52 lakhs also 58 lakhs also included. That is what it means. The profit from such business included in the business income. It is already included. So now we have to find out what is the deduction. So we have to see why this deduction. So this 80 IAB. So what it is? It is related to special economic zone. So what is that special economic zones? If a business is conducted in special economic zone or situated in a special economic zones. So what is this special economic zones? Can you give any example for special economic zones? Any example for a special economic zone? I'm waiting. Respond fast. Jamshedpur, no. Manita Tech Park, very good. Metropolitan cities, no. Special economic zones is like, for an example, Manita Tech Park, RMZ, Infinity. Correct. So such kind of places is called special economic zone. Such kind of places is called special economic zone. Okay. I'm not asking about the company. I'm telling about special economic zone. Snehavalli. Okay. Am I clear? So special economic zone. This is if a business is situated in special economic zone, then if the company is started newly, then the company is eligible to claim 100% of the profit whatever they earned for next 10 years. Next 10 years. Okay, if a company is situated in special economic zone, okay, if a company is situated in special economic zone, then the company is eligible for deduction under section 80 IB. So how much they can claim? That is 100% of their profit. 100% of their profit. And for how many years? For next 10 years. 10 consecutive years, or the company can decide it. What is the 10 years? So within 15 years gap, with the 10 years, they can claim it. So next 10 years, they can claim that as a deduction. For what do you mean by deduction? No need to pay tax on that income. 100% they can claim it. So what they are saying in this, the company income, whatever 72 lakhs is there, right? In that, this 58 lakhs is included, and that for that the company is eligible for 100% deduction. So we have to compute, and we have to deduct a deduction of 58 lakhs and compute the total taxable income. Am I clear? So can we proceed? So now we'll solve it. Okay. So what we have to do is computation of total taxable income. Particulars rupees. I'll clarify here. So now we have to see what are the heads of income for the computation for companies. That is income from, first head of income is income from house property. So the company, do they have any income from house property? Yes. How much they have? That is 7 lakhs. Correct? They have income from house property is how much? 7 lakhs. And next is income from business. So how much they have here? That is 72 lakhs minus set of losses as per the format. Do we have any set of losses of business? So we don't have any kind of set of business losses, right? Yes or no? In the question, do we have any kind of losses the business is incurred? No, there is no information. So it's that time you have to consider nil, not zero. Okay, income tax you have to consider nil. Okay, so next is, what is the next head of income? What is the next head of income? Put it in the chat. What is the next head of income? Yes. Income from capital gain. Okay, and the next head of income once after income from capital gain. So do we have any income from capital gain here in this case? Do we have any income from capital gain? Do we have any income from capital gain in this problem? Do we have? No. So then it will be, then this is also will be nil. Okay, and the next is, next head of income is income from other source. So do we have any income from other source? The whatever the income they have given, it is mentioned in the question, correct? So we have it is mentioned in the question, so that's the reason we don't have any other income from other source. So this also will be nil. Okay, and minus unabsorbed depreciation. Do we have any unabsorbed depreciation? That information also not given. If information is not given, don't worry about that. Just consider that as a nil and proceed your calculation. Okay, so proceed your calculation. So now tell me, what is your gross total income? Once after this, whatever you are getting, that is called GTA, that is called gross total income. What is your gross total income? What's your gross total income? How much? 79 lakhs. Sorry, 72 lakhs, right? This is 79 lakhs. Okay, 79 lakhs. So this is my gross total income. And the next is what I have to do. Next is deduction minus deduction under section 80 G2 80 LA. Do we have any deductions here? Do we have any deductions here? Yes or no? Answer to my question. Do we have any deductions? Yes, sir. Yes, we have deduction. What is the deduction? What is the deduction? What is the deduction and how much we are supposed to deduct? Answer to my question. What is the deduction and how much we can deduct it? Special economic zones, good. How much? 100%. What is the value? On what value? On 79 lakhs? On 79 lakhs, I'll be claiming 100% or what value? Yes, tell me. On 79 lakhs or what? On what? I can claim 100%. Then on what value? On profits of what? On profits of what? It's okay. For an example, on profits of business to a 7,20,000, 72 lakhs. No, one person has given a right answer. Very good. 58 lakhs. Okay. On 58 lakhs, we have to claim a deduction. So that is what it is. Deduction under section 80 IAB special economic zone deduction. How much? 58 lakhs. Okay. So we have to claim the deduction and the remaining will be considered as a total taxable income. So what is my total taxable income here? What is my total taxable income? You tell me, what is my total taxable income? 21 lakhs. Okay. Now, 21 lakhs. So this is how we have to compute. So can we compute this tax liability, normal tax liability for this question? Can we compute? But in the problem they didn't mention. Can we do it? Can we calculate the normal tax liability for this question? Yes or no? Yes. So can you help us? So now, so they have given the normal tax liability, total income. We got the total income and we have to proceed it. So next is we have to see if the company is, what type of company it is. Did they mention whether the company is a domestic company or a foreign company? So what we have to consider when there is no information is there. When there is no information is there, we have to consider the company is a domestic company. When there is no information, that we have to consider it is a domestic company. Okay. Okay. So once we have to considering the company is a domestic company, what is the flat rate of tax we have to consider? For domestic company, what is the flat rate of tax? 25% on what cases? Snehavali, you said 30%, and Pramod, you are saying 30%. On what basis? 25. Very good. 25%. Very good. Very good. Okay. Okay. Why 25%? Because there is no information is given in the year 2018-19. We don't have any other information. So that time we have to proceed with 25%. Okay. So in this case, so company, they have got 25%. So now we have to calculate. We came to know that computation of tax liability. Okay. Okay, here only I'll do it. Computation of tax liability. Okay. So now, what is the company's total taxable income? It is 21 lakhs. So since we are using the flat rate, so directly on 21 lakhs into 25%. So how much? On 21 lakh, 25% is how much? 52,000. 5 lakh 25,000. Sorry. Wait a minute. Yes, now you are clear. So 25,000. So 5 lakh 25,000. So next to this, we need to add surcharges. Are we supposed to calculate surcharge for this question? Are we supposed to calculate surcharge for this question? Answer to me. No. Okay. Why? Why we are supposed to? Because the total income of the company does not exceed 1 crore. So that's the reason we are not supposed to calculate surcharge. And the next what we have to do next is health and education cess. How much? 4% on what value? On 5 lakh 25,000. So 5 lakh 25,000 into 4%, how much? So Ruchita has raised a hand. Ma'am, Madhu ma'am, you can unmute Ruchita ma'am.
Yes, sir. Ruchita.
Yes, ma'am. Ruchita C.
I do that, sir.
Yeah, ma'am. Yeah, so we got health and education says 4% on 5 lakh 25,000. It is 21,000. So now you calculate the normal tax liability. So total it. So you will be getting it. Yes, Ruchita, you can ask your doubt. What is your doubt?
Good afternoon, sir.
Good afternoon, ma.
Sir, here computation of total taxable income, we should continue or we should prepare separately, sir?
Which one, ma?
This one, sir, computation of total taxable income table, sir. Now which are doing that one?
Now this is tax liability calculation, normal tax liability.
Okay, sir.
This table is different. That is just to calculate the total taxable income. That's all.
Okay, sir.
Okay.
Okay, sir.
Okay, fine. So now, so my on the health and education says 4%. I got 21,000. So altogether, if I total, my total normal tax liability will be 5,46,000. But this is not the final value the company is supposed to pay. They have to pay the they have to calculate the MAT and they have to compare whichever is higher, and then they'll be paying the tax. As of now, we'll stop here. Okay. So I have created a question. So I hope you are clear in this calculation, right? Any doubts? Any doubts still here? No, I think so. Okay, you can copy down the question answer. Yes. Can you see the screen and solution? Finish copying it. Can we proceed? Respond something. Just calculate only. You just consider only this much. No need of going to the normal tax liability calculation. This is for your understanding. I have gone. That's all. The question was asked only for normal total taxable income. That's all. That's the reason. Okay. Calculate 2 minutes. I'll give time. Finished? Can we proceed? Yes, very good. Okay. So next problem, we'll move into the next problem. Okay, next question. So I hope this question is also with you. During the financial year 2019-20, T Limited has the following income. That is profit from business 5 lakhs and income from crossword puzzle 30,000, income from selling of long-term capital gain 3 lakhs. Compute the total taxable income. Calculate what? Can you calculate the what is the total taxable income for this question? Yes or no? If not, I'll do it. Respond, please. You'll try it. So shall I give 2 minutes time? Yes, I'll give 2 minutes time for your calculation, for your solution. You try it and you let me know whether you have calculated right or wrong. And meanwhile, I think I hope that you people have the questions right. Yes. And one more thing, kindly go through the LMS content every day. We have we are going using the concept called flip class. So in the LMS content, I have given the questions already. Kindly look into that. Okay. The same kind of same questions only I'm here solving here in the class. Okay. Nothing extra I'm doing here. Whatever it is uploaded in LMS, that only we are doing here. Promote 8,30,000. Okay, correct. Okay, next. Okay. Okay, Pramod, for you the question you can ma'am, can you unmute Pramod, ma'am?
Yes, Sashi sir, I'll do it.
Yes, ma'am.
Pramod, any initial is there?
Pramod, yes, I think so, ma'am. Pramod,
Okay.
roll number is 6400.
Done, sir.
Yes.
Uh,
Yes, Pramod.
yeah, sir.
Yeah, tell me, Pramod, this is where does this profit from business comes under which head of income?
Income from business.
Income from business. Very good. Next is income from crossword puzzle. It comes under which head of income?
Income from other sources.
Income from other sources.
Other
Why it
sources.
is income from other sources? Why not be income from capital gain or income from house property? Why it not be? Why you have considered income from other source?
Sir, it's like crossword puzzle is an extra, like is income from house property is like any property we own and we do, sir.
Very good.
Like we are getting rent, so it's
Okay.
considered as a house property. Like when it comes to business, any business we are getting profit means it's considered as business property. Next, capital gains, when we are selling any land or anything for a long term, so it's considered as capital gains. Next, other sources are like any other incomes from like puzzles or like any lottery tickets.
Shall I help you in this? Shall I help you in this?
Yes, sir.
Yes. Any income, for an example, any income which doesn't falls under the previous head of income, such income is considered as income from other sources. In simple terms, the crossword puzzles, what it is? Does it related to business? No.
No, sir.
And does it related to house property? Crossword puzzle, does it related to house property? No. Does it related to assets or selling of any long-term assets or short-term assets? No. So that's the reason it comes under income from other sources, and this income is called casual income. Okay, am I clear? This income is called casual income, and that's the reason it comes under income from other sources. Once again, I'll tell, any income which doesn't falls under the income. Hello. Okay. If any income which doesn't falls under the previous set 3 heads of income, such income will be considered as income from other source. And next is income from selling long-term capital gain. So it is only given here, so it comes under income from capital gain. Okay. So next, do we have any kind of gross total income here?
No, sir.
We don't have any gross total income. Next is, do we have any deductions? We don't have gross total income.
Same, gross total income is considered as total taxable income because we don't have any unabsorbed depreciation and
okay,
deduction.
That aggregate of 4 heads of income is only known as gross total income in simple term. Okay, so aggregate of 4 heads of income. What are the 4 heads? Income from business, income from house property, income from business, income from capital gain, and income from other source. Okay, so this aggregate only will be considering. Yeah, Aruchita, you can unmute yourself. You have raised your hand. I have unmuted you. You can unmute yourself and tell what's your doubt. Ruchita, you can unmute. You have any doubt? Yes, Pramod, do you have any doubts, Pramod?
Can we proceed? I need the table, like specimen of taxable. After that, I didn't take. It's only I need that.
You didn't take note, right?
Yeah, sir, I need that.
It is available in the LMS website, sir. It is uploaded there. The specimen, you can copy down that. Okay. Okay, fine.
Yes,
solution.
Thank you, sir.
Okay, thank you, Pramod. Thank you for your help. Okay, so here, see here, as Pramod said, the answer will be 8,30,000 only. Why? I'm straight away I'm telling that why, because there is no any kind of losses. The company doesn't have any kind of losses or any kind of, sorry, for an example, any kind of unabsorbed depreciation. Nothing is it. Straight away is given here in this question. What they have given, it everything is computed value directly they have given. So that's the reason we are considering and we are proceeding. Okay, so for your information, I'll solve it. Okay, so computation of total taxable income. So income from house property, first head of income, it is nil. Next is income from business. So we have business income. So how much it is? 3 lakhs, or how much? 5 lakhs. 5 lakhs. Next is income from capital gain. Correct. So income from capital gain, how much? 3 lakhs. It is also given directly. And next is income from other source. So do we have only one income from other source? That is income from crossword puzzle. So in simple terms, if any income which doesn't fall under the previous heads of income, such income is called income from other source. So that is 30,000. Okay. So now minus any kind of unabsorbed depreciation, do we have? No, nothing. So total aggregate of this is known as gross total income. So aggregate is 8,30,000 minus deduction under section 80 G to 80 LA. Do we have any deductions, any kind of savings the company has done, or any kind of investment? Nothing they have done. There's no information, so it will be nil. So my total taxable income will be 8,30,000. Very good. So the answer whatever you have given, it is correct. Am I clear? Any doubts here till here? Any doubts here? Can we proceed further? Can we proceed further? Yes, sir. Okay, very good. It's clear. Okay, one more thing. One more. For this, can we compute the tax liability? Normal tax liability. Can we compute the normal tax liability for this? Can you compute? No. You can't compute the normal tax liability. Why you can't consider the why you can't consider calculate the normal tax liability? Yes, Nehavalli, why? Everything is there. Whether the company is a domestic company or no deduction. Tax liability. I'm asking tax liability. It doesn't mean that when a company has deduction, then only we have to compute the tax. No. Whenever the company earns even 1 rupee, if the company earns also, we need to calculate the normal tax liability. Okay. I'm clear, Snehavali. We have to calculate. In this question, since they have asked total taxable income, we have stopped. Okay. But in any problem, any kind of questions or any kind of, if any company earns even 1 rupee also, we have to pay. So Jivita, can you help me? Can you tell me how it is for 22,15,800? I can unmute you. Can you raise your hand so that I can unmute you? Jivita. Yes, you can unmute yourself, Jivita, now. You can unmute yourself.
If any.
1 minute. Yeah, unmute yourself now.
Sir, can you hear me?
Yes, Jivita. Proceed.
Good afternoon, sir.
Good afternoon.
Sir, as you said in previous problem, if there's no any information given, the company is said to be considered as domestic company. So yes. Domestic company is charged 25% of tax.
Very good.
So on TTI, you have to charge 25%. That is 8,30,000 into 25%. You'll be getting 2,07,500.
Okay.
And on that, if the surcharges are meant to be charged, since the income doesn't exceed 1 crore, we are not supposed to charge surcharges. So only health and education cess is to be charged. That is 4%. So on 2,07,500, 4% is 8,300. So when you add up, it comes around 2,15,800.
Okay, very good, Jivita. But only one corrections we have to do here. It is not 2,15,000. Why I am telling is because there is a rule, there is a provision in income tax. What it says is, if any capital gain, if it is a long-term capital gain, okay, if any capital gain, if it is a long-term capital gain, on that gain, straight away flat rate of 20%, no more, no discussion. On that income directly 20%. Okay, separately first you have to calculate. Next is, if any income is from casual income, any income from other source, and that income is a casual income, then such income 30% flat you have to calculate. On the remaining balance only you have to proceed with the 25%. It is a rule. It is a rule given by income tax. If any long-term capital gain you have, the flat rate of 20% on that income. And the next is, if any casual income you have, on that 30% flat rate. Am I clear, Jivita? Okay. So now for this question, can we compute the tax liability? Okay. For this question, can we compute? For an example, I think some line mistake. Okay. So here the company's total income is 8,30,000, right? So we have to see the company, does it have any long-term capital gain? So for that, first you have to calculate. So long-term capital gain is how much? It is 3 lakhs, right? On that 3 lakhs, straight away, not saying any other condition, straight away 20%. So how much on 3 lakhs 20%? It is 60,000. Correct. Next is casual income. Any casual income. Do we have any casual income? Yes. The crossword puzzle. So 30,000 into 30%. Straight away. No need of saying any other thing. So how much it will be? It will be 9,000. And the next, the remaining balance. How much will be the remaining balance? On 8,30,000, 3 lakhs we have calculated, and for 30,000 we have calculated. What will be the remaining balance? Remaining balance will be 5 lakhs. So on 5 lakhs, 25%. So how much it is? So 5 lakhs 25% is how much? How much? 25% on 5 lakhs? Answer. Yes. 1,25,000. Okay, 1,25,000. You are clear here? Clear? Okay. So now on this total plus surcharge. So are we applicable to surcharge here? No, because the total income doesn't exceed 1 crore. No surcharge. So plus health and education cess. So on this total, what is the total of tax value? That is 1,25,000 plus 60,000 is 1,85,000. 1,85,000 plus 9,000, it is 1,94,000 into 4%. How much it is? How much? 7,760. So total of this will be how much? 1,94,000 plus 7,760. How much? It is comes around 2,01,760. Okay, so this will be my normal
Ashi,
tax
sir,
liability. Yes, ma'am.
time is over, sir.
Time up,
Because
ma'am.
3:30 they'll have next session. So
Okay, ma'am. Okay, ma'am. Only 1 minute, ma'am. 1 minute, ma'am. I'll finish this. Okay. I hope you are clear with this. If you have any long-term capital gain, it is 20% on their capital gain straight away. And next is, if you have any casual income, on that income 30% straight away. Okay. This I'll explain once again in the next class. Okay. Thank you so much. You have the next class, so that's the reason. Thank you so much. We'll discuss about this Jivita in the next class. Thank you so much. I'll be ending the meeting, ma'am. Madhu, ma'am.
yes, sir.
Yes, ma'am. I'm ending.